Markets still trying to make sense of the situation in Venezuela. U.S. President Donald Trump has said that America plans to take control of Venezuela's oil industry and ask American companies to revitalize it. Now, we did see some pressure on Canadian oil stocks yesterday amid speculation that there'll be more Venezuelan heavy oil coming on the global market, competing with ours. Let's get more from Rebecca Teltscher, portfolio manager at Newhaven Asset Management. Rebecca, always great to see you. Happy New Year. I hope I'm not too late.
Happy New Year.
Thanks. We also are hearing, of course, that it's going to take years to significantly revive Venezuela's oil production.
Yeah, it was interesting to see the market's reaction yesterday to the Canadian oil stocks. Am I concerned about U.S. oil production? I mean, maybe in the medium to long term. In the short term, absolutely not. And in the meantime, there's a lot of, like Carney said, we could build more export pipelines if that ever gets done. But there's a lot more questions than answers right now as it relates to what's going to happen with the Venezuelan oil production. As you mentioned, it's going to take years and, estimates from tens of billions of dollars to hundreds of billions of dollars to be able to bring Venezuelan oil up to 3 million barrels a day. So lots of questions, lots of uncertainties, and if there is going to be a displacement in oil, this is a medium to long-term situation. What I find interesting is that the market, while it was reacting really sharply to what's a potential medium to long-term risk, was completely ignoring some short-term, risks. What are we experiencing now? Geopolitical concerns that are higher than they've ever been, a slowing economy, a slowing housing market, an overvalued stock market, and the stock market in the U.S. and Canada are continuing to make record highs, largely ignoring, what I think are larger concerns than what we're seeing in the oil market.
So I'm trying to get, just sticking with the oil market. So the stock market is doing just fine, but the oil market is, it's interesting, isn't it? Stocks hitting record highs, but oil down sharply.
Yeah, so, oil was down prior to, the announcement of Venezuela. There is, talk about, OPEC, they're going to be producing more. So there is a supply glut. Also, we've been saying this for a long time, that the economy is slowing. There is a potential risk of a recession. And in general, the demand for oil goes down in these periods of time. So that's not surprising at all. Actually, what we found commendable is how well our Canadian oil producers held up in such a weakening environment. We've said it for a long time, like CNQ is our favorite oil producer because they are the low-cost producer and they own premium assets. So they're going to be able to thrive in a low oil price environment, relative to, let's just say, some of the U.S., light oil shale plays where, if we see prolonged periods of sub $50 oil, what's going to happen to the production in the U.S. Whereas I'm not concerned about Canadian oil production, even if we see, prolonged periods of weaker oil prices.
One stock you like the look of is Enbridge. It saw some selling yesterday, but you see long-term value here.
Yeah, so, those are the two stocks that were down the most in our portfolio yesterday was CNQ and Enbridge. And again, just seeing how much they fell yesterday, it reinforces our view that these were not fundamental traders that were selling the stock yesterday. It was probably fast money, hedge funds, algorithms, or quants that were trading it, because anyone who looked at the fundamentals, I don't think would have sold. So you look at, Enbridge, it was down 3% yesterday. It still yields 6% and growing. Their main line is full. The only asset that would be at risk is, they did announce that they're going to expand their main line. So, maybe they're not going to do that. But, that was a $1 billion project and a $20+ billion project of CapEx program. Most of their growth is actually in gas distribution, which is very utility-like. So, I think, again, in the short to medium term, their main line stays, remains full. I don't think there's a question about, a displacement of Canadian oil in the short term. Why the stock was down 3%. news to me. Again, not a fundamental trade. CNQ, same thing. Like the stock opened down 8%. I think it
Wow.
closed down 6%. But if you look at the actual makeup of what they're producing, about 15% of their oil is actually that conventional heavy oil that would compete with Venezuelan oil. Their production is about 40% natural gas, which is often discounted, but that is a big bulk of their production. And their oil sand production, a lot of it is actually upgraded. So it's upgraded light oil or synthetic crude, which is actually trades at a premium and doesn't necessarily compete with Venezuelan oil, so it wouldn't displace that oil. So again, two stocks that we own, we continue to own. We saw weakness yesterday. We're seeing some continued weakness today. Again, we don't think that's a fundamental long-term issue with the companies that we own. We just think this is quick money coming out, and this could be an opportunity to buy more. We're kind of waiting and seeing right now how this plays out, but the market is, I think, looking for something to trade, and it just seems to be that Canadian oil is getting the brunt of the selling in the past few days.
Rebecca, thank you very much indeed.
Thank you so much.
Rebecca Teltscher, Portfolio Manager at Newhaven Asset Management.